I'm very curious to study this particular trading day. Amazing, actually. I was thinking after this long, strong move up that we were going to have a correction, but you never can guess when those are going to happen in a strong bull run. But here's today's candle. It is red. It is engulfing, and I was thinking it could happen up pretty high. Fortunately, but I didn't take the higher trade. I did copy trade a couple of accounts and shorted up higher. But let's see what I was looking at. I'm trying to figure out, when did I first want to think about shorting? Okay. Now I have a note here on one of my, okay, here's a short idea I wrote down on this chart right here, short idea. Probably because what really got me interested is that price had fallen below previous day's levels. That's previous day's levels. Couldn't hold it, and I'm thinking, it's fallen below and it's consolidating right here. This would be a good place to try to short. I didn't take that short though. I did start to short when price came all the way down here though, which was pretty low. All right. And that's on this particular copy trade. I copy traded these two accounts and we did some shorting right in this area here. And I'd stopped shorting my copy trade accounts when they were profitable, and I went into, bigger $500 risk amounts for my stop loss. So sometimes I'll take a $50 to $100 risk limit, and sometimes I'll take a $500 risk limit when I really want to give it some room and I think I'm in the right direction, but it's just being choppy. So that's what I did, and we were able to be profitable today, thank goodness. Okay, I will have to confess that I was triggered into a kind of a dollar cost averaging mindset right here on a few trades. And after I got out of my short, I closed everything. I thought it was going to go back up. And I tried to go long right here and got stopped out. But what I did was I went short at the bottom. I said I made my mind up to go short. And I had 2 micros here, 1 micro here, and then I added 3 more here for a total of 6 micros altogether. And it came down and it did nicely for me. And that was just, I'm trying to get away from dollar cost averaging, DCA. DCA is not good, and I'm transitioning into real fixed stop loss amounts, and I've been doing really good with that. And I'm unfortunately still have some issues with the dollar cost averaging sometimes, but I'm not trading that way in all the accounts. There's certain accounts I'll do that with. I'm not going to go back to dollar cost averaging every single account that I have and see if I can do something. It's more far and few between at this stage because I still like to see. I like to do it, I guess, but it's definitely not the way to make money, in my opinion, and not a way I want to practice professionally. So that's just a disclaimer here. Okay, I really want to get into my head and my mindset on why I was thinking short, because it really worked out today, and I want to see if I can replicate that in the future, So let's just go back to, obviously, the day chart, and price had fallen below previous day's high right there, and I was already thinking, if it consolidates and wants to push, that pattern that I showed you was the reason why I was looking to short. And then on the hourly, the 4-hour chart, we got some trend lines that are breaking. These upward trend lines are finally coming to crossovers. And I was looking at that, and let's see, the 60-minute chart. This is where I started shorting on this big red candle down right here. And technically on the 60-minute chart, it's still bullish. And so, I guess if you keep your stop losses pretty tight, that, you can get away with shorting on a bull market. And it just depends on the time frames, because what looks bullish on one time frame you can zoom down and really see bearish and get in on the bearish flow of that, right? So that's the hardest part about using multiple time charts, is just kind of letting one time frame go and investing your focus on a more accurate time frame. Because, at some point they're not going to agree, and you got to figure out, what time frame you're trading on the most. But I usually like to watch the 15-minute and the 10,000 tick. And right here, when price started closing below the 8, the 20, and the 50, because right here's where I started shorting in my copy pasted accounts, that still had bullish tendencies. All the moving averages were perfectly aligned above one another in order in terms of the priority of the size of the moving averages. The 8 was above the 20 was above the 50 was above the 200, and everything was bullish and trending up. And with that said, price drops down below those 2 moving averages and those 3 moving averages. And I'm thinking, I guess when you put it all together, I guess what I have to understand is that I didn't just do it based on any one thing. It really was a combination of several things. Okay. And right here, I didn't start shorting on the 5-minute chart until price did cross below the 200 moving average, and price was already consolidating down in this area right here. That's when I started to think short. That's when I started to actually go short. The idea to go short was much, much higher. I didn't execute, but the idea to go short was much higher. And then I shorted down as much as I felt good, and then I tried to go long, and it stopped me out. And then I reversed to go short, and then it went all the way back up. And fortunately, I added properly, and we were on the right side. Short was the right side, and it came down all 6 micros into profit territory where I closed and traded that for 1 micro. What I really want to see here too is I was pretty profitable for me, and right here it was just taking so long to do anything, and I got out right before the breakdown. I was profitable right here a little bit. I got out of 6 micro short and traded it for 1 micro short, sold covered the micro here for a profit. But I really, really believed that it was going to keep going down, and I just got impatient. I want to really drill that into my head. The pattern was perfect for continuation on all the time charts I'm looking at, 5-minute and everything. There's no reason why I should have gotten out of that. I just didn't want to give anything back. That was the main reason. And I guess it's the opposite of greed. Fear of losing my profits is what kept me from waiting longer. So anyway, I want to point that out. Yeah, I didn't wait long as I could. Now let's take a look at the statistics. Let's start with the dollar cost averaging. The reason why I stopped dollar cost averaging. We did end up, even after all that, was losing $24. Okay. The 6 micros that came back down were profitable, barely covered what I lost on the bad trade dollar cost averaging. The overall dollar cost averaging graph is this: $44,000 of blown Apex 50K accounts. It's not real money, and it's just showing me that kind of trading is terrible. Okay, so what I'm done with my $500 risk is we are up 1,600 so far, and we don't. I guess I like this. I like this a lot. With this kind of trading, I really haven't had a 500. I have had a $500 losing trade, but during the day I was able to make money back. So this is just the day's wins and losses. But there have been $500 losses on trades. I just happened, before the day was over, make some back to get some of these profitable trades here, or even just minimizing the losses. I haven't had a $500 loss day on that trading. I guess you could say the day could be a lot more than 500 if I have a $500 loss and keep trading and have another $500 loss. That'd be a $1,000 loss. So that would, I got to figure out what I'm going to do about that. How many will I take in a roll? And I'm thinking 2, but $1,000 can wipe out, almost a week here if you're not careful. Easy a week. Easy a week. Do I really want to do that? I have to think about that, And then we have copy trading. Right here, just from the copy trading accounts, we're up 16 if you just count those trades all by themselves. And right here, I like the copy trading. I don't copy trade unless I feel real confident that I understand the direction of the day. And not every day you do understand. There's days that you think you do and it just goes wrong. But there's some days that you really think you got the right direction and you feel confident with copy trading some accounts together to maximize your wins. And that's why there's fewer trades of this particular kind of trading. Discretionary altogether, including, the $50 risk limit, the $500 risk limit, and the copy trading and the evening trades are all in this account together. So this would include, the $50 risk limit trading strategy, the 500. It does not include DCA. I do not include my DCA dollar cost averaging, stuff, which I'm getting rid of in these accounts, because this is how I'm really going to be trading. I'm going to be trading with my discretion and with either anything between a $50 and a $500 stop loss per trade. And that's going to be my real cash, real money psychology and risk management way to do it. Now, if I can continue to be profitable like this, continuing on, then I shouldn't be afraid of switching into my real money accounts or using my past 50K PA accounts to start building up real money so I can have a payout, right? Because I have 2 accounts that I've passed, have not traded in them yet. I'm trying to pass some more, but at some point I'm going to stop and I'm just going to use the ones that I have. I may not get to 20 past accounts anytime soon. You don't really need that many. I could do well with just 5 or just a couple. I have 2 now. If I really were to get good at mastering my trading system, I also got 3 real money accounts with my real personal real money, not a prop firm, small accounts. Then I would have 5 accounts right there. Those could all be linked together if I wanted to. Probably won't, but I think that I'm getting to the point where I'm going to have to transition out of trying to pass prop firms and really start using good technique in the real money accounts and building up the PA accounts so I can get a payout from Apex. Anyway, that's where we're at in today's video journal and our journey to be funded. And I hope you guys are learning with me, and I'll see you in the next video. Take care. Peace.